Why your money is losing value even when it feels safe. In this video, I'm going to be talking about money debasement and the importance of being aware of it and why your money needs to be compounding year on year. Remember, this is according to my own research, it's based on my own personal views, and this is not financial advice. If you want to keep up to date with markets, I do have a free newsletter. Link to that will be in the description. Money is being devalued, and this links back to the Everything Code. This is something that Michael Howell, even Raoul Pal, talks about this. This is essentially the Fed balance sheet, or balance sheets of central banks, whatever you want to call them, are expanding, and this is why everything is going up. So the banks were bailed out in the 2008 after the 2008 crisis, and now they just print. It's quantitative easing. It's just them throwing money at it, hoping it all kind of solves itself. But obviously, what we're seeing is asset prices, really going up. So this is essentially the Everything Code. Asset prices rising because money is being debased. So everything or every asset is compared to usually dollars. Look at the stock market, look at gold, look at Bitcoin. All right, so they're all compared to dollars. And the question is your money compounding faster than the debasement? That's really the question you want to be asking yourself. So I talk about this on the 16-year bull market of the S&P. So this is when the 12/21 EMA on the monthly crossed bullish. That happened in July 2010. And this has coincided with this liquidity expansion that we've seen. So cash is a melting ice cube. So Michael Saylor, whether you love him or hate him, he mentioned that, or he found out that, hang on a second, if I've got cash reserves, if I've got money saved, my money is just going down. So how can I outpace this, never-ending treadmill, if you would like. So Michael Saylor, as he famously said, he started to accumulate Bitcoin in August 2020. The thesis was currency debasement, and he said, finally finding a place to store my wealth that cannot be debased. So he clearly looked at everything. Well, stocks aren't going to do it, real estate is going to do it, so he put his money into Bitcoin. So Michael Saylor saw cash losing value, Bitcoin's fixed 21 million supply as the solution. And obviously Strategy holds the most BTC. That number may have changed since the time of recording, or since the time this goes out, because they're always chopping and changing stuff. But they're the largest corporate holder in the world of Bitcoin. And they're slightly underwater at the minute. I believe their average entry is in around 70, but they believe in the long term of this. So you've got to realize that, like I put there, the honest caveat is Bitcoin fell 50% and Strategy lost close to 13 billion in market cap value, right? So the thesis about debasement is right, but they have got leverage attached to it. But this is somebody acting upon this solution, and this is why you could argue Bitcoin actually was created in the first place. So 10% profit or growth. Have you actually made money? 10% is roughly where you would break even against debasement. So people talk about 8%, people talk about 9%, 10%. A business making 10% profit margin feels like success. But if the cost of everything you buy goes up 8%, staff went up 8%, rent goes up, all this, are you really making any money? And this is a really hard question you've got to be asking yourself. It's like, is my business, is my personal savings, is it going up by 10% a year? Because you could argue, if this is true and this thesis is correct, 10% is like anything above is profit, which is crazy. If you've got 8%, really good year, did well, have you made any money against debasement? You could argue not. You're on this never-ending treadmill. So yeah, 4% interest on savings when the real costs are 8 to 10, you're actually losing money. So 10% is the floor, not the ceiling. So it's almost like 10% you're in profit. That's like the thinking you want to have. And I know you don't want to go out and chase that 10% year on year, but I think it's really good to be aware of, like, okay, cool, 10% is like the minimum I need to be getting on my money, in my business, savings, whatever it is. So the target is to compound significantly above the rate of debasement, and then you're really making money and really building that wealth. So this is like almost the benchmark. Like 10%, you clear that, you're going to be looking good. So what 10% compounding looks like. So I've put some numbers there. You start with 10 grand in pounds and how that compounds. And even with, you look at debasement, like that's the debasement, kind of going the other way as well. So you are treading water, you could argue, at that way, at that kind of level. So which is really interesting to see. So that I thought had been interesting to put in. Compounding again, it's super important to know. It's super key. I put there obviously 4% over 28 years. The gap's huge in compounding, which we all know. Add debasement in that, the 4% is literally nothing, right? So you need to be really conscious of that. Like, okay, cool, compounding is a real thing, and you do need to be aware of it. The psychological trap. So fear of losing versus not growing. So you can think, okay, cool, I'm sitting in cash, I'm liquid, I've got this money on the side, for 10 years, and you can, feel safe when actually you're falling behind. You really are, because of this never-ending treadmill. You speak to people, it's like, oh, I'm building up my savings, I'm just gonna put it in my savings. It's like you need to invest that bitch. You need to just get it in. Like you need to be growing it somehow, because if not, you're just gonna be on that treadmill and you're just gonna be losing. So you saving money, sitting in an account, like, okay, cool. If it's not growing, what is the point? And that could be done in so many different ways. As we spoke about in other videos. A number, going down feels real. Purchasing power erosion does not. So you don't see this. It's like the silent tax, you could say, is that erosion. So the visible loss compounds every year. So you also have the compounding effect of the debasement as well. So the risk is your money not growing fast enough. So you really need to be conscious of that. Like your money needs to be growing very fast, or well, at that 10% rate. Otherwise, you're not losing money, because it's going to compound the other way as well. So you can't be sitting on the sidelines. So what actually beats debasement? Equities, they've been 12% since 2009. You've had gold, central banks buying at record levels. The same reason for Sailor. You've had People's Bank of China literally devaluing their currency to buy back gold, supposedly, which is really interesting. Real estate and other productive assets. Some people would argue equities, gold, and real estate aren't making you any money. It's all relative, but these are the ways that you probably have got to look at. Bitcoin, you can throw in there as well, which obviously we've already spoken about, but the goal is to compound faster than debasement. So everything below that rate is losing in real terms. So think of it, equities since then has beat debasement. Gold, has done relatively well since then. You've got flights of real estate, house prices have gone up, right? So you need to be wary that, okay, cool, I need to be compounding this, which it has done. Will this change in the future? Who knows? You can't tell the future, but since 2008, this happened. And remember, in life terms, if you want to call it, 2009, is nothing, right? It's absolutely nothing. These things go back years and years and years. So this could be the start of a new era that we're just in. The verdict: money is being devalued. 16 years of money printing, and everything could prove it. So watch videos on Michael Howell, watch videos on Raoul Pal. They talk about this money debasement and how it's it's very difficult to outpace, but you need to be aware of that, especially if you're thinking to build your savings, or save for a rainy day. What's the point? 10% is the floor. Michael Saylor discovered this and learned this, and then what he's done with MicroStrategy in terms of getting it onto, I believe it was in the Nasdaq at one point, like what he's done. People have got to be thinking of those solutions themselves as well, or you're just going to be losing out, and the invisible loss compounds. So you've got to be in the market, you've got to be investing, you've got to be taking this stuff seriously. You've got to think of it like the health and fitness for your wealth, all right? Everyone knows you've got to work out, you've got to eat a somewhat clean diet, you've got to do the same with money. If not, you're going to just fall behind. If you found this interesting, you want to keep up to date with markets, I do have a free newsletter. Link to that will be in the description. See you in the next one.